Welcome to Pasta Charting. This is an idea from one of my subscribers. Thank you very much. As you can see, I have made some pasta colored noodles here, and I have the AMC stock chart up from January on our left up through the June-May run, and then the following downtrend. And you can see that we're at a very low level right now. This week is green so far. However, I want to show you what the weekly chart looks like. These are our daily candles. We did have a nice hammer-esque reversal, followed by a strong green day. A gap up, but then the price fell, was unable to maintain that level. And as the price fell, it started to plummet. We now have momentum. We are now officially in a downtrend. I'm gonna go ahead and take one of these noodles, and this would be the downtrend that we're currently in right here. You can see that there's a strong level of resistance at that point, and I do expect to see more downside to come. Now, using another noodle, I can connect these peaks here, and you can see that the downtrend, as it continues, accelerates, and that's expressed by the price being further more distant from the trend line itself. So moving forward, I think this week we're actually going to turn red again, and we could even see this accelerate more. Now there is some support down in the $14 to $13 region. I can go ahead and draw that right now. But as you can see, the price is already encountering that level. So moving forward, I'm expecting more bearish action.
I hope that you enjoyed that. I had a great time making those noodles. They came out pretty good. I made some Alfredo sauce, cooked up some chicken, and it came out great. I want to talk about the charts for real now. Yesterday, you might remember me saying that if the price were to move below the intraday high, or the intraday low of yesterday, that the price would continue to fall further, and it indeed did just that. This was a bull trap. People were all feeling bullish, and I said, no, this is bearish. This is not good. When the price rises on the terms of the short sellers who are covering, that is to say, in pre-market, that's not good, you know? Not all buying pressure is necessarily bullish. We had a lot of volume spikes way up here, right? Now we have this big peak with a massive amount of volume. We now have a high volume peak, which means it's going to be a significant area of support and resistance. And I might as well just draw that right now while I'm here, just so I don't forget. But that's going to be an important level to break through should the price rise up to that level again. Now, I want to pull up my 15-minute drawings. This is where I've been doing all my charting. These yellow arrows, I've been using them to show where I'm entering and exiting my positions. So right off the bat in the morning, I started entering into puts right away. This downtrend was just strong, and this overhead resistance kept me in my puts. I would have taken losses had the price risen above here, but it didn't. And the price continued to fall, and fall, and fall. And I exited that first series of puts right here. I got a little nervous. You know, the RSI starts to move bullishly. You know, the implied volatility is not rising. So my in the money, I use vertical spreads when I trade puts, right? I use the in the money puts to hedge against any loss from the drop in implied volatility of my out of the money puts, which is exactly what happened. I didn't make money on my out of the money puts. I made money on the deep in the money puts, and that was good. So I waited out as the price kind of waffled back and forth, formed this corrective uptrend. And when I saw the price start to fall and break out below and confirm this breakout, I entered into another series of puts. And at this point, I couldn't buy any puts with really high delta without spending an exorbitant amount of money. I mean, if I didn't have a cash account, I could just short, but I have to buy puts. So I bought some out of the money puts and then watched them run into the money. And towards the end of the day, I said, I'll take my gains and go. And that's what I did. The price did continue to fall about 25 cents, which isn't a lot given everything. So there you have it. Big bull trap. The price moved below the intraday high from that previous session and then continued to fall lower. What happens next? Well, you can see that the implied volatility is starting to rise as the price drops. So that could be a very bearish omen. I'm going to go ahead and let's change the drawing set first. Let's go back to the daily here. And now I'm going to pull up the 1-day chart. Here we are. Okay, Tim Sketchy is first a lot, you guys. A lot. So, there you go, Tim Sketchy. You're on my daily. Now let's zoom in here. Let's zoom in. What do these candles look like? What do they look like? Well, I guess we already kind of looked at that in the pasta charting, right? But let's take a real look. Eeeh. That is a huge drop. This is now patterns. Bolkowski's pattern recognition software identified this as a pivot point reversal. This is nasty. You can see the wick and then the price just pushing down and closed near that intraday low. We are now officially back under this level of support and resistance at around $18, heading straight for 14. Again, insane, right? I was talking about the RSI hitting 30 and turning around, and it rose to 32, but here we are, turning around. Go back and watch my other videos. You can hear me say this a lot, that I expect to spend a lot of time in this oversold area. So to see the price re-entering here is, you know, makes sense to me. I'm not surprised. The volume was just above the 30 period average at 48 million-ish, which is over the 47 million average, 30-day average. Implied volatility did drop as the price is now passing through a couple of other trading days range. You know, that's fine. I think moving forward, we're definitely going to see a retest of this level, this descending triangle target, 1424. I think moving past that area could lead us down even further. Now, I've been asked to talk about gaps a little bit because there are some gaps that never filled, right? Let's see here. Where are those gaps? Is it, let's see. Are they really low gaps, like the $3 to $4 gaps? Oops. Give me like 2 years. Yeah. Okay, let's go ahead and zoom in back here. Okay, and ooh, is that the gap right there? Are these the gaps we're talking about? We're worried that we're gonna fill these gaps at $3. Yikes, that's a low gap zone. And there's another one down here. So I have Bulkowski's page, or his website, thepatternSite.com, and there's an article here, Bulkowski on engaging gaps. And he says that he finds they don't work very well as support and resistance zones, despite what candle lovers claim. Gaps in an uptrend, rising windows, show underlying support 20% of the time in a bull market and 16% of the time in a bear market. In other words, when price drops and stumbles upon a gap that happened in a prior uptrend, price will reverse at or within the gap 20% of the time. Okay, so I don't think that these gaps have magical powers. The price isn't being sucked into a vortex, into the void, the abyss of the $3, the $2 range. I mean, my analysis doesn't support the price dropping this far. Not at this time, at least. I'm gonna go ahead and pull up my weekly chart really quickly, and let's talk about why my analysis doesn't quite reach that level. I think it's this one. Yeah, it's this one. If you're new to my channel or you haven't seen this, there's a lot here, and sometimes my charts break and I have to like pretend to draw something and then it'll let me zoom in. Oof, yeah, this is looking real sloppy. There's just a lot of information on here. In fact, let me turn this on to the daily. Let me go to 3 years, days. And then I'll be able to expand it a little more. Okay, so I saw the price moving through a massive descending triangle, and then this massive measure move down ensue, and it continues to drop. But why do I think that the price will stop at $7? That's actually a trendline analysis that I did that suggests that the price target for this target is somewhere around $11. Originally I had it at $7, but I think it might be more towards $11. I might review that again just because I don't like to be inconsistent. But those targets are still pretty low. But here's a trendline study. And let me get this back into log scale, because outside of log scale it doesn't make much sense. I mean, it does, I guess, make sense outside of log scale. You can see this price, the January being resisted there, and that was the breakout point before the June run, right? And now the price seems to be finding support there again. But let's put this into log scale, because this is where I drew it, was in log scale. And this downtrend is based off of one of the prior highs, and then comes off of this level here. And you can see that this downtrend pierces the January to June price action, and the price is spinning around it. And that's approximately where I expect the price to bounce, which is at about $7.50, right? $7. Like, that's super low. That's super low. Let's turn on the weekly here, and let's just try to judge whether or not our momentum indicators could, you know, support that, if there's a hint of that being possible. And you can see on the weekly RSI that, you know, there's still room to go down, right? What's that currently, 32? You know, if the weekly RSI were to reach single digits, that would make sense to me. That's a huge plummet down though. We got a ways to go before we get down there. But I do think that's possible. I do know that these levels of volume have a lot of people confused. These are exceptional amounts of volume. Exceptional amounts of volume. And the price hasn't been moving under relative levels of that volume for a very long time. And the volume trend now, this seems to be the new normal, right? So it's important to use volume as a relative point of reference. It's nothing is really written in stone here, right? So I'm not super worried about the gaps, but I do think that a drop to $7 is looking pretty likely. Let's go ahead and zoom in on this trend line here on the weekly time frame, and let's just let's have a look, see what we see. So this is the weekly, and yeah, I'm sorry, this looks really bad, right? This weekly candle is shaping up really bearishly though, really bearishly. Okay, this makes more sense. Here on the daily, you can see these green corrective phases, and they're just getting broken all the time. Let's go ahead and give it a little more definition and go to the 4 hour. This will be even better. Yeah, and you can see, boom, boom, boom. The price is now falling and has officially closed below the trend line again. The price moved up and was just immediately thrown down. This is so bearish, so bearish. The last time the price was above that level and got thrown down was back here. All right, kaboom! It just gets thrown down. So I wouldn't be overly surprised to see something similar. And now we have this double top coming in, right? That would be a double top. If the price passes this low of 1340, then the price could fall quite a bit further. So to see this low at 1340 and the high at 18, that's wow, $5.30. So another $2 move, we'll say, from 1460 puts us at about $12 or $11. That would be the approximate target for that double top, should it be confirmed. And I think that the price really could go down there. It really could. So I'm still really bearish on AMC, I really am. And that's my input on gaps. Let's pull up American Eagle Outfitters, something I'm actually bullish on. Because, I don't know, being bearish is less fun. American Eagle Outfitters is still in the downtrend. You can see this now, right? The price has bounced off of it that bottom trend line a couple of different times. I'm gonna go ahead and change my time frame to the daily and pull up my daily drawings. And I have a falling wedge drawn here, and this is a well-formed wedge. I'm seeing a lot of poorly drawn wedges going around online. Beware of poorly drawn wedges. Wedges are beasts of their own as it is, so make sure that you have distant valleys and peaks, and that you have more touches than you actually need, right? And if the slope of these trend lines is too steep, be skeptical. There's a touch point there too. So you can see how evenly distributed these touch points are in this pattern. That is to say, the price is passing from top to bottom very evenly. This is a very well formed falling wedge, very well formed. So today we did see a drop in American Eagle Outfitters. That is a red candle, you can see that. The price did almost reach that top trend line and then rejected. We do have a nice tail though. Let's go ahead and zoom into the 1 minute and we'll get a better idea of what happened throughout the day. All right, huge 1, 2, and 3, and then a recovery. Isn't that nice? Very nice. I was very happy to see that, especially since I'm holding a call. But I am buying this stock. So I saw the price fall, and then right here, I saw the RSI doing a failure swing pattern, and I bought right there. I bought right there. I bought that dip right there. Amazing. Amazing stuff. And then there was this, look at this volume candle. What is that? Like, the volume on this stock it moves very interesting. I think that it's important to watch a lot of different symbols because not every stock trades the same. Like, this was nuts. That wasn't even a big price move either, really. What was that? Right there, like, okay. Yeah, it's a tall candle compared to its neighbors, but it dwarfs, absolutely dwarfs all the other candles around it. Let's zoom out a little bit to the 15. You can see that there is this uptrend, and American Eagle Outfitters is respecting it still, which is good. I'm looking forward to the price breaking out above this downtrend and moving higher. I am bullish on the stock, and that's because of fundamental reasons. I made a video on that as well. You can go back and watch that. So at the end of the day, I am still bearish on AMC, I'm still bullish on American Eagle Outfitters, and that's all. Happy trading.